I'm going to show you what the buyer estimated closing cost looks like. This is if you want to do it manually. We don't do it manually anymore. But this is if you wanted to. I'm going to show you how you actually do it on Bright. So you log in under your Bright account. You search the property that you're looking to do the estimate for. In this case, I'm going to use one of my older listings that I sold. So this is 2434 Montrose Street. We sold it back in 2021 for $481,000. So how do you prepare the buyer's estimated closing cost? You search the property that you're going to make the offer for, or the one that you're trying to calculate for your client. And then you go here where it says buyer estimated closing cost. Right here, you say buyer closing cost, the little B with the dollar sign. You click on there, and that takes you automatically to the buyer estimated closing cost. Now, it pre-fills information about that listing so you don't have to manually put it in. The sales price is $480,000. Let's say that's the price that it was listed for. Settlement date. You got to pick a settlement date. So you got to make sure that this settlement date matches with the settlement date that you put on in the agreement of sale. So let's say we're settling the end of March, so March 31st. Then the tax is already on there. We don't have to worry about that. The interest rate. Let's say the client is getting a pre-approval for a 5.5 interest rate. Is the buyer getting seller's assist? So let's put he's getting. You can either put the seller's assist as percentage or dollar. So let's do 3%. You go here to buyer. What's the name of the buyer? Let's put Carlos Geraldo. Property address, county, school district. That's already pre-filled. Is it a condo? No. Number of units. Be careful when you have this here because sometimes it's a multi-unit and it shows as a 1 unit. So you got to make sure you put how many units. Now, you're supposed to put here how much deposit you're giving with the offer. I never put it here, and I'll show you why. Then what kind of loan? Is it a conventional, cash? Is it a purchase cash, conventional, FHA, USDA, or VA? Let's do conventional. And then you can put how much down payment is your client giving towards the loan. Not in deposit, but in the loan. So the price is $480,000. Is the client putting 3% down, 5% down, 10% down? So let's say the client is giving 3% down. You can also change it to a dollar amount and put, let's say my client wants to give $50,000. So you put just $50,000 here. Okay? But in this case, let's keep it simple at 3%. Mortgage type, is it a fixed, ARM balloon? Let's do fixed. So now you have the mortgage amount. I want to give you an advice. Before you write up an agreement for your client, do the buyer's estimating cost first. Because automatically you're going to have information here that you can use in the contract. Right now, you already know the loan amount because it calculated for you because you're going to put 3% down. What kind of term? Is it a 30-year mortgage, a 40-year mortgage, a 15-year mortgage? You got to put here in years, okay? Then you go down here and you say, okay, how much or what is the lender charging your client to provide the loan? Origination or points? Usually we go with discount points. So let's say it's going to charge 1 point. Appraisal is never prepaid, it's always unpaid, and usually an appraisal on a residential home is $550. You should get this information from your loan officer. Credit report estimated at $50. Document preparation, you should know it from the lender, but let's say it's $500. Underwriting, another $500. Flood certification, tax escrow, $150. Courier, $35, which is FedEx. Wire, another $50. Escrow waiver, put $50 just to be safe. Again, this is your estimate. Most of the time, your loan officer will send you the estimate along with the pre-approval. But we have to do our own. So you can take the fees from that estimate from the lender and put it here. I put it here based on my knowledge of my experience, but always get it from the lender. Transfer taxes is very important. In Philadelphia, and because of the agreement of sale, we're splitting 50-50. But what if the seller says, I'm not paying the transfer taxes? You, Mr. Buyer, have to pay all the transfer taxes. You got to put it right here. So instead of being 2.14, it's going to be 4.20. But most of the time, it's just 50-50, 2%, 2.1 to the buyer, 2.1 to the seller. The recording, that standard mortgage recording, NORDI, you put another more NORDI fee, commission paid by the buyer. A homeowner's insurance, never put it as prepaid, always unpaid, because usually this is paid at settlement. So you calculate how much the homeowners is going to cost on this house. On the house that we're looking at, which is Montrose, let's look at it. Looks like it's been renovated, right? Remember, homeowner policy prices go because of the sales price and the location and the type of property. So if it's a townhouse or a row house, is more expensive than a twin or a single because you have more exposure to neighbors catching on fire, right? So let's say the homeowners on this property is going to be like $1,400, and I'm just taking a wild guess. Home inspection, unpaid because they got to pay directly to the home inspector. Termite inspection, unpaid because they got to pay directly, so let's say it's $95. Radon inspection. So you got to put here all the expenses that they're going to have for this transaction. And then here, you got to put in your conveyancing fee. Remember, we charge a conveyancing fee, which you guys make money on. We charge $9.95. Okay? Now, you don't touch these things down here because this is automatically calculated by the system. It's about the escrows for the taxes and the insurance. So now you go and you just hit preview. Now you have the seller's estimated closing cost, buyer's estimated closing cost. You have the buyer's name, property address, the type of loan, and the rate. Here you have the purchase price, settlement date, down payment, which is 3%, is equal to $14,400, and then you have the mortgage amount, which should be on the agreement of sale. Now, here you have the closing cost. How many points is the lender charging? A point is equivalent to 1% of the loan amount. How much is the appraisal? How much is the credit report? Remember, we fill this in. So now you have total closing cost is $6,600 roughly. Now you have title insurance fees. Then you have transfer taxes, 2.1%, which is half, recording fee, home inspection, homeowners, and then you have your broker service fee here, your conveyancing fee. Here you have the escrows, because remember, taxes and insurance are included in the mortgage, so they have to have escrows. Then you have reimbursements to seller, because if you buy the property today and the seller already paid the taxes for the whole year, they're going to be reimbursed up until from the day of settlement until the end of the year. So this happens here. And then here you got purchase price, total closing cost, lender escrows, reimbursements to seller. This is how much the whole transaction is going to cost, $508,000. And then you have how much you're getting for the mortgage. You have no deposits. Now, the seller is giving us 3% seller's assist, right? $14,400. So instead of needing, so you need a total of $508,000 to buy this house. You're getting a mortgage for $465,000, and then the seller is giving you $14,000 in seller assist. Now you only need $28,000 to buy this home. And this is what you tell your client. This is how much you're going to need to buy this house. How much is the payment? This is principal and interest. This is what the real estate taxes are monthly. This is what the homeowners is monthly. And then we have mortgage insurance. Mortgage insurance is required every time you get a loan and you don't put 20% down. We will go into detail about mortgage insurance when we go into financing. So this person's mortgage right now is $3,420 a month. Now that you told your client how much they need to buy the house, you can subtract the deposit or the escrow deposit that you're giving. So let's say they're giving a deposit of $5,000. Then you subtract it from the 28. Let's say they pay the home inspection. You subtract it from the 28. So this is your top number, and from here you start subtracting all the things that they're going to pay while in the transaction. Appraisal, home inspection, first deposit, second deposit, etc. Also, the lender has to give him an estimate. So make sure when you're working with a lender, you tell the lender to include your conveyancing fee on their estimate. Because when they disclose the loan, they need to include your fee. Because if they don't include it, they can't put it on the HUD-1 or the settlement statement at closing. And then you're going to be out of that money. So make sure when you have your client, have the lender include your conveyancing fee. Whether it be $495, $595, $995.